All right, welcome back. Welcome back. Let me share my screen. I want to talk quickly about money. Today, I think the Dow Jones hit a record high. You guys don't know what the Dow Jones, the S&P 500 are. Please just Google it. But they are basically the index of some of the major, most popular, most viable, most marketable. Uh, you know, these are basically the companies that control the market cap. All right. So most of the money, a lot of the money in the market are going into these companies. Okay. And they've grouped them into a group of companies. They call some Dow Jones 100 and then the other one S&P 500. Basically, some of the most, marketable companies, 500 of them in a group, and you can actually buy these companies together in what they call the ETF index funds. Okay, so I'm not going to get into the definitions here because I'm not really an expert, so I don't butcher them, but I do know how to look at the money and I do participate quite a little bit. Let me share my screen with you and then we can use that to warm up and see what happened in the markets today. Let me see here. Oh, can you guys see that? Aha, there you go. Yep. All right, so let's use that to warm up really quickly because again, money is everything. Okay, so when we're talking about record highs today, I don't know if the market actually ended up finishing all the way at the top. I'm not sure, but let me just take a quick look. But I know that the market broke record highs today, and then I'm going to read this article and then we'll take it from there. Dow rises more than 100 points to close above 38,000 for the first time ever. When they say ever, that means ever. Now, to me, this doesn't mean too much, okay? This is just newsworthy material. It doesn't mean too much when it comes to personal level. But somebody's going to use it to sell somebody some kind of package today. So you want to be careful with that if you are participating in the market. So it says above 38,000 for the first time ever. There's also inflation going on. So, it doesn't mean much except it allows the market movers to sell more. Okay. Stocks rose Monday as investors built on the previous session's historic move to record highs. The Dow Jones Industrial Average climbed 138 points. Okay. All right, so the Dow Jones is essentially, let me see here, I can find the proper definition for it. I can't see it, okay? But it went above 38,000 for the first time. You can see right there, okay? Let me see here. Okay, good. The Dow Jones average climbed 138 points or 0.36% to finish at 38,000. Now, the 0.36% is much more important than any of the big numbers. Okay, the only thing it tells me, if anything, maybe the only thing it's telling me is that okay, there's at least today, maybe in the past few days, the market is bullish, which means people's greed are playing a big part in, and for whatever reason, maybe we can find that out in this article, right? Monday's gains pushed the blue chip average to a new record, so that's what they call it, the blue chip average, and above the 38,000 level for the first time. The S&P 500 added 0.22% to 4850, also reaching a fresh all-time high. The Nasdaq Composite advanced 0.32% to 15,000. Macy's, all right, this is what I found interesting about this particular article today. Macy's, okay, every time I was still at the mall, probably for the first time in like a year, because I don't go to the mall, but we went there to go and get pepper soup, believe it or not. Shout out to Adibola restaurant here in New Jersey. We went there to get pepper soup at the mall, our biggest mall here, which is Woodbridge Mall. Excuse me. All right, I'm a little clumsy, I'm just coming back. All right, so we went to the mall and the mall was dry, and we saw Macy's all the way across the hall, and things just seems very dry. So I've noticed that the retail industry has been struggling quite a while. Right across for Adibola Kitchen is the Lords and Taylor. Maybe some of you in America might know what Lord and Taylor is, and it's completely shut down. Okay, and it's been shut down since COVID, and there's a lot of departmental stores like that has been shut down. All right, and that's a big deal for all of us. All right, that's a big deal for all of us. Now, I know you've been shopping on Amazon and buy everything on Amazon, so you don't really care, but in the grand scheme of things, that's not what you want for the economy. But it's also inevitable because, naturally the world moves and evolves, right? So it says Macy's rose more than 3% after rejecting a $5.8 billion proposal to take the retailer private. Okay, so Macy's is still out there, and they're still whatever. I don't want to call it struggling because they rejected $5.8 billion. But what does $5.8 billion mean with respect to the actual market value of that company, right? So maybe they used to, I don't know what they used to be worth. Maybe they were worth $20 billion, and now somebody is like, this is Banjo. This is cheap. Let me offer them $5.8 billion to walk away. So I don't know if that's 20% of what they used to be worth, and they're just rejecting that. But for some reason, I guess there's some signal in the marketplace, and people are hyped about it. And that particular company rose more than 3% today in market value. Okay, so it doesn't mean anything. Make sure you know what you're doing before you put any market in any places. Let's see. Solar Edge jumped roughly 4% on the back of the company announcing it would lay off 16% of its workforce. The company is going to lay off 16%, and then it jumped 4%. Even on the surface, right? That's crazy, right? They're laying off 16% of their workforce, right? So now, the people that are looking at the business closely might be like, okay, this company is going to be worth, at least they shave off some of that expenses, right? The cost of running the business, right? So maybe people that are already in position, they are buying more, right? We don't know, right? Anyway, there's a company here, I don't know how to, okay, Archer Daniels Midland plunged more than 24% after issuing weak earnings. All right, so all of this stuff, anyway, bottom line, what I'm trying to say here is this, okay? The market is crazy. If you have 401k, if you have anything like that, what I want to tell you is that make sure you're not playing to this news, okay? If you're an average person, you're not a trader, make sure you're not just playing to the news. Make sure you have a strategy, okay? Make sure you have a strategy. If you don't have a strategy at all, make sure you at least have what they call the dollar cost averaging. Is the slowest but the steady way to grow. You grow with the market over time. I'm going to share this graph with you to show you what that looks like in real life. Okay. Let me share this with you. Let's see. Share. Okay. Hold on one second. I'm going to share this with you. There's a little graph I usually show people. It's a 6-month graph of a real play in business and in market, right? And I always like to show it to people so that they can have a realistic expectation of what's possible in the market. A lot of people just come into the market and they want to get rich overnight. Obviously, the stock market is not the place to do that. There are people that trade and make a lot of money, but they also tend not to tell you how they're losing money. There are also people that trade bitcoins and things like that, and they make a lot of money in one day. They might tell you things like, 300% in one day. Some people might even go crazy enough to say 10,000% ROI in one day, but then they forget to tell you the news when they lose money. You see, what you're looking at on your screen is what it looks like. This is your input into the market. Wherever you decide you want to put in on a daily basis, on a weekly basis, on a monthly basis, you set that. You don't change it for any 6-month period at any point in time, okay? And you simply input that into whatever you've decided to trust, whatever vehicle you've decided to trust. If you don't know the market at all, the ETFs are great. The ETFs, they call them the index funds of the major index funds, right? Like the Dow, they call them the diamonds, DIA. You can search them on Google, or the S&P 500, which is called the spiders. S&P 500, SPY, or the third one, the third major index. There are many indie index funds out there. The third one is called, I'm trying to think, not the NASDAQ one, the Qs, right? It's 4 Qs. If you search that on Google, right? and you whatever you set, you put that in there every month. You set it. There are ways you can automatically set them up, okay, and then you just have that going in, and this is what it looks like when it comes to your input, okay. Now when it comes to the output, in terms of how your portfolio is doing over time, this is the reality, okay. This is the money. You see this? This is going to be the reality, okay. All right, so in that 6-month period, you might see all kind of turbulent moves and stuff like that, and this is where most people will try to remove their money from the market. They panic and things like that, right? Or so some people will come in at they might come in at where, like the news today, 138,000, right? No, sorry, 38,000 points, right? Like, oh my God, the market is good. Like, let's put some money in right now. And what happens is that they put all their money in when the market is overbought, right? Is it overbought, oversold, overbought? Basically, like too many people are buying. There's a hype in the market, there's greed in the market, everybody's bullish. At that point, it's usually too late for you to put a whole lot of money. But if you're playing the long game, right, it's never too late, it's never too early. You start today and you drop some there. On the day that is cheap, you're buying cheap. On the day that is expensive, you probably already made money because you had money sitting there in the first place, right? And that's what you want to do if you're an average person. If you're doing anything, if you're going to do anything aggressive, make sure you know what you're doing, because the market will eat up your money, okay? That's the reality. The market will eat your everything up, okay? If you're playing to the emotions of the market, yes, the market does have emotions. It's just people like you and I, right? The market will eat up your money, okay? And it will be your fault, just so you know. All right, so as you can see here, I'm trying to see if I can push this to all. Okay, there you go, all. This is what the market looks over time. So if you're buying the index funds, or you're buying into 401ks and stuff like that, this is what your money will look like over time. So if you zone in, it's like an accordion, right? If you zone in on any particular place, you might see a place where you've lost a lot of money, but eventually it goes back up. If you see that the money goes down, your portfolio goes down, you put more money in. If you are an average person, then you will hear a lot of people say things like scare money don't make money. Be careful with statements like that. Those people that talk like that, they often end up, I know a few of them personally. During the Bitcoin bullish move in 2017-18, I warned them. Listen, it's very similar to relationships. Same things, the same principles, okay? I warned them. They didn't listen. They lost all their money. And I'm talking hundreds of thousands of dollars, okay? So, because again, the market is not anybody's mate. Just like I tell you, emotions no be your mate, right? When the market is moving, if you are following just its moves and you have no strategy, you're basically operating off of your emotions, and you're probably gonna eat yourself up eventually. MOP, loving the financial business investment segment. You do, okay? I will keep, anything I find interesting, I'll share it. Some of you might even know more than I do, okay? Please feel free to share anytime, okay? Diversifying your portfolio with bonds and treasury is also a good way to keep your sanity. That's awesome. Yep. Yes, awesome. Yeah, so please also talk to, there's a lot of people calling themselves financial advisors today. I would say make sure you learn as much as you can by yourself, but also talk to advisors. There's nothing wrong with that. But when they're talking, you want to be able to make sense off of what they're saying, right? Not just telling you, move your money here, just do this. You're like, no, you don't want to do that. There's no excuse to do that, because there's more than enough educational material that has broken these things down to small, easy 5th grade level language that you can understand. And you don't have to be able to speak the lingo. You just have to know that money is energy and money flows towards value, okay? And you don't want to lead with your emotions. You want to have a strategy, okay? All right, awesome. I wanted to do Money Mondays and just warm up with that. Do me a favor, hit that like button, share, subscribe, turn up your notifications. And I'll be back in about 20 seconds. We do have some stuff to cover.
It's your love that I've been missing. I miss all your hugs, your touching and kissing. Me love on the floor, the couch in the kitchen. One love enough, we done enough.